Today I'm going to do a past paper question on cash flow statements. Okay, the first thing you're required to do is you're required to identify the activity for 4 transactions. If you look at the first one here, purchase of shares in another company. If you purchase shares in another company, you take your money and invest in another company. So the first answer here is investing. The second one, repayment of a loan. When we're talking about financing activity here, financing activity is where you get your capital from. Remember, you can either sell shares or you can borrow money in the form of a loan. So if you're repaying a loan, that forms part of your financing activities. Okay, then sale of trading stock. That's a day-to-day activity which falls under operating. So the third one here will be operating activities. And then the fourth one here, sale of a fixed asset. Fixed assets bought and sold are investing activities. You invest in fixed assets, you buy fixed assets to run your company. So when you sell fixed assets, that's also part of investing. So the last answer here is investing. Okay, then they give you some information, and the first question asks you to calculate some amounts. So we're going to start here with depreciation for the year. In order to work out depreciation, you need to use this formula where you say carrying value at the beginning of the year, you're going to add what you've bought, you're going to minus what you've sold, you're going to minus depreciation, and that will give you carrying value at the end. And this time, because we're trying to work out this depreciation, that's the one we make X. So if you have a look above here, the carrying value at the beginning of the year was 1320, and at the end of the year it was 1250. So you can fill those in. 1320 at the beginning, 1250 at the end. They then tell you that fixed assets were purchased and some fixed assets were sold. If you buy fixed assets, that's going to increase your carrying value, so you're going to add the 170. If you sell fixed assets, that will decrease your carrying value, so you subtract anything you've sold. And now it's simply a matter of solving for X and getting 130,000. Okay, the next thing we're asked to calculate is the loan repaid. To do this, you're going to take the loan at the beginning of the year plus any new loan minus what you've repaid, which you will make X here, and that will give you a loan at the end. So if we have a look here, the loan at the beginning was 40,000 and the end 60,000, and it tells you here in number 3 that an additional loan was taken out during the year. So we start with our loan at the beginning of the year, which was 40,000. We add that new loan of 35,000 minus something, and that gives me the loan at the end of the year, and you solve for X, so you've repaid 15,000. Don't just subtract the difference between the beginning and the end. Okay, then the next one is income tax. When we're talking about income tax paid, basically what we pay is any tax owed from last year plus this year's provisional tax. So if you have a look here at SARS at the beginning of the year, that figure there is 6,200, it says credit. If it's credit, it means it's a liability, so we're going to pay that at the start of the year. So that's the first amount that I start off with, 6,200. They then tell you that the income tax amount in the income statement for the year was 184,000. So that is what we should have paid, so we add that 184,000 Rand on. If you then look at the end of the year, SARS has ended up with a debit balance. That means SARS owes us, and SARS is going to owe us if we've overpaid provisional tax. So in this case here, we've paid the 184 that we should have paid, and we've paid an extra 8,000. So all three of these amounts then are going to get added. Remember, it changes depending on whether SARS is a debit balance or a credit balance. Okay, in this case, we owed money from last year, we paid that. We add what we should have paid from our income statement, and we paid extra, so we add that on as well. Okay, then in terms of dividends, the dividends that we pay is any dividend owed from last year. So the first thing we're going to pay here is the 64,000. So the 64,000 will be the first thing that we pay. If you then look, they give you total dividends for the year of 130,000. So that's your interim final dividend for this year. So you're going to add that on. You're going to add the 130,000 on. But if you have a look here, of that 130,000 here, we've got shareholders for dividends of 82,000. That's our final dividend for this year. Remember, final dividends are declared only, and only after they've been approved at the AGM are they actually paid. So at this point here, although our total dividend was 130,000, of that we haven't paid 82,000. So you're going to subtract the 82,000 because that hasn't been paid yet. So it's the shares for dividends at the beginning of the year. You add the total dividend for the year and subtract the final dividend that you haven't paid. Okay, then the next one says BB Traders is experiencing cash flow problems and their bank balance is in overdraft. Briefly explain 3 strategies that can be used to overcome the problem or alleviate the problem. Okay, you need to get money coming into the business. So you could sell more shares. You may have unused fixed assets which you could sell. Take out an additional loan that's a long-term loan. The money will come into the business straight away and you can pay it off over several months. Or you can even cash in a fixed deposit. If you've got an investment, you can cash that in. Okay, then the next one, calculate the amount that would have been received for the sale of shares during the current financial period. Okay, if we have a look here, our share capital here has gone from 1890 to 2.5 million. Alright? But they tell you in the question here, the average issue price is 500 cents and 75,000 was paid to buy back 10,000 shares. So when we're dealing with share capital, everything must be at average issue price. So that buyback of shares, we're going to use 5 Rand times the 10,000, which is 50,000. So with your formula here, you start with the balance at the beginning of the year. You subtract the buyback of shares because those shares have been repurchased. Add something which is your new shares, and that must give you your share capital at the end of the year. And then you solve for X and you get 660,000. So don't forget, everything here in this equation must be at average issue price. Okay, and then lastly here, they say, complete the sentence, buyback of shares is an outflow of cash. We're paying to buy back, and sale of shares, we're receiving money, so that is an inflow of cash. Okay, then what I've done here is I've just put down a summary of some of the calculations. Let's just quickly go through those. The income tax that we're paying now. The first thing we pay is any tax due at the beginning of the year, and we also pay provisional tax for this year. Remember, if SARS is a debit balance at the beginning of the year, that means SARS owes us, we don't pay that one. Okay, if at the end of the year SARS is a credit balance, means we haven't paid enough tax, so that won't be a payment either. So you need to check where SARS falls before deciding what you pay. But in general terms, what we are actually paying is any tax owed from last year, plus any provisional tax we paid this year. Okay, then dividends. The first thing we pay is last year's final dividend. Remember, it was waiting to be approved at the AGM. Usually always gets approved. So the first thing we pay is last year's final dividend. And to that, we're going to add this year's interim dividends. Interim dividends you can pay in cash. You don't need to wait for approval from the shareholders, so they can be declared and paid immediately. So that's what we're also going to pay here. So last year's final dividend plus interim dividend for this year. And then purchase or sale of fixed assets. We've already gone through this, but just to remind you, carrying value at the beginning, plus what you buy, minus what you sell, minus depreciation, will give you carrying value at the end, and you just make the unknown X and solve for it. Any loan repaid or a new loan, you take the balance of the loan at the beginning, plus any new loan, minus any loan repayment, must give you the balance at the end. And once again, you make the unknown here X and solve for it. And then lastly, buyback of shares. The amount you pay when you buy back is going to be the difference in the ordinary share capital amounts from last year to this year, plus any extra amount that you pay. Remember, cash flow, there's no matching. We're just interested in the amounts that we actually receive or actually pay. So when you buy back, you don't only pay back the average issue price to buy back those shares, you usually also pay an additional amount. So don't forget to add on that additional amount. Alright, and then just one last thing. You're going to need to learn your layouts for this. They usually give you at least partial layouts, but we don't know what those are. You cannot be losing marks because you don't learn your layouts. So my main advice for this section, learn your layouts. At least this way you'll get some part marks for your calculations, because you're not going to get everything wrong. Okay guys, the next video will be on analysis and interpretation. But for now, that's it. Thanks.